Good afternoon. We start here this afternoon. DStv operator Multichoice has published its interim results for the 6 months ending 30 September. The group reported revenue growth of 7% to 28.65 billion rands for the 6-month period, with operating profit also up 6% to 6.2 billion rand. We're joined by Group CEO Calvo Mawela to elaborate more on their performance in the interim period. Calvo, thank you very much for joining us this afternoon. Give us an overview of how you view these financial results and your performance, particularly at a time where more streaming services are coming in and the macroeconomic environment not being the best it could be for the past couple of months, particularly the beginning of this year.
Thanks, Solani. Good afternoon to you and good afternoon to your viewers. I will describe our interim results as that we have delivered solid subscriber growth and steady margins. And by that, I mean we have grown our subscribers year on year by 1 million subs. And as you said, in a tough economic environment with consumers under pressure, and as a consumer-facing business, it means we must work harder to keep our products relevant to our subscribers. The revenue is up 7%, the trading profit is up 2%, our core headline earnings is up 2%. We have also taken a strategic decision to invest in decoder subsidies, and hence our free cash flow is down 44%. And we know that the World Cup and the festive season are the periods that we grow our business, and we believe that we should be able to grow the business during this period. So we are upbeat about the second half of this year based on the content lineup that is coming through, and we believe very strongly that we should be able to deliver good returns for our shareholders.
There's a lot to be upbeat about. The T20 World Cup, the FIFA World Cup coming up, as you said, the festive season as well. I saw that there was a headline loss posted of almost 250 million rand owing to the weaker rand. Explain that part, because it's a loss per share of 60 cents for this particular period.
Yeah, and it's as a result of the weaker rand, and it's really translation of our satellite leases, which are unrealized really, and also the extraction of cash out of Nigeria, with the currency in Nigeria having had a hard time during the first half of this year. So that is what brings the headline loss to that number of 60 cents. But if you look at the operating environment that we are in and look at how the company is performing from an operational perspective, you can see that we are still a growing business, growing by 1 million subs in a tough economic environment. We have costs under control. We have had cost savings of about 600 million rand for the first half of this year, which is close to the 800 million rand guidance that we gave to the market for the full year. So far, the operation of our business is doing very well, and we believe very strongly that the second half will take off from what the second quarter of this year has performed, and will continue to produce very good results going into the second half of the year.
You're also investing heavily on local content, which is demonstrated by the fact that you are spending 48% of your general entertainment spend on that. Clearly, this is a strategy that you want to keep, you are using to keep local viewers tuned in. Is it paying off so far? Because it's been years since you have been making these investments in local content.
Yeah, local content is one of our key differentiators into the market, and we have invested a lot in producing content in the languages of many of the countries that we operate in, and that has improved our appointment viewing. And as I said, with subscribers growing at 1 million in a tough economic environment where inflation is up and people are feeling the pressure, that demonstrates that the product is still relevant in our markets. Our strategy to invest in local content is paying dividends. We have seen Reika, for instance, getting nomination for the Emmy Awards, and fingers crossed that we see ourselves being the winners in the category of drama at the Emmy Awards, which are coming in December this year. And we have seen a lot of co-productions coming through. We just released Blood Psalms, which has done very well. And there are many other co-productions that we are looking forward to in this coming financial year and going into the future. And these co-productions help us in exporting talent and making our talent being viewed across the globe. That is an investment that we'll continue to make because it's definitely paying dividends and gives exposure and also gives us as Africans to go and share our stories at a global stage.
You have actually spoken about how this period has been quite a challenging one. At the end of this particular period, at the end of September, we saw Canal Plus, the French broadcasting corporation, which used to own 20% of shares in Multichoice. They dramatically increased their ownership to over 26%. What do you attribute to this interest, this growth in the biggest investor in Canal Plus, in Multichoice?
I think it's a vote of confidence on the company. I mean, these are people that can deploy their cash anywhere in the world, and they've decided to invest with us. And the feedback that we're getting from them is that they believe very strongly that this is a well-run company, run by very competent people, and they've delivered results on a year-to-year basis. And we take that with humility and continue to work hard and demonstrate that indeed we can be able to return in terms of give them returns that they're looking for in terms of the execution that we have done. And we have regular interactions with them on a month-to-month basis, where as a shareholder we have to go and account and also share our experiences, because they operate predominantly in the French market and we operate predominantly in the English market. And those exchanges have helped us to be able to understand where the world is going in terms of video entertainment, but of course being wary of not sharing competition stuff that can get us into trouble with regulators. So we treat them as a shareholder like everybody else, but at the same time there are learnings that we are seeing. For instance, on co-production, we have been able to come together. That helps us in sharing the cost of production of good content. They deploy it in their French territories. We deploy such content in our English territories, and that augurs well for us going into the future.
Calvo Mawela is the group CEO at Multichoice, telling us his views and insights on the financial results for the past 6 months. Quite a good set of results, considering that the macroeconomic environment has been quite challenging. And when you look at local and rest of Africa operations, there has been growth there as well.